Last half hour here on the Market Day Report, we went through the national harvest summary numbers. So let's kind of drill down into this just a little bit and then get a response from Brian Hoops of what he thinks of these numbers as we look at more specific areas. I-80, in fact, along the corn harvest line there from west to east, Nebraska, 76% complete. The 5-year average is 46. We're 30% ahead of the 5-year average. Iowa, 78. Illinois 80, Indiana 62. Ohio still has some ground to make up. They're 32% corn harvested now. The 5-year average is 52%. If you flip the page and go to the soybean harvest progress, well, we've got the Nebraska at 97% wrapped up, Iowa 94, Illinois 90, Indiana 82, and 73% of the Ohio soybean crop is now in the bin. That's only a little bit behind the 5-year average of 78%. So obviously, Ohio farmers have been concentrating on soybeans at this point. Brian Hoops is here with us. Brian, was there anything in these numbers that stood out to you?
Hey, good morning, John. Yeah, we're certainly not delayed at all in harvest of corn and soybeans around the area. And if you look at North Dakota, South Dakota, Minnesota, they are well ahead of their normal pace. A lot of producers are finishing up, and that's a sharp contrast to what we saw a year ago, where they were trying to finish up with some of their harvest and couldn't finish that until the springtime. But what we're going to see here this week with the very cold, wet conditions, some rain around the Midwest, we're not going to see a lot of harvest activity, and that's going to firm up the basis, I feel. With demand remaining still very strong overall, we're shipping a lot of soybeans out, we're shipping a lot of corn. Basis, I think, will continue to be fairly narrow as we're not able to fill those pipelines because of a lack of harvest progress.
Ron, I want to go through these futures here because corn really started out with quite a bit of strength here this morning, but now we've turned lower. December's down 1 1/4, 4.16 March is down a penny. Many of these contracts at least a penny lower. Over in the soybeans, November's down 4 1/4 now at 10.83 January down 5 1/4. March down 4 3/4. When you talk to people, Brian, what do you tell them when we see a market start out with strength and then start to pull back like this?
Well, a lot of times, it's a sign of some technical weakness. It's also a sign that maybe the fund demand that we've seen drive prices higher is kind of relenting a little bit. We have South American weather starting to return to a little bit more of normalcy. Rains are coming into Brazil. Rains are moving into Argentina, and that's allowing producers to catch up on their soybean seedings. They're still well behind, but they're going to make up some of that ground. But with the moisture returning, we won't have another weather rally like we have seen because of the dry conditions. So we have to go through the next kind of the phase here, next several weeks, to see how much crop can be planted. And then if we need to add any more weather premium, if it does return to more of a drier pattern, we certainly would take another leg higher because of the strong demand and the fact that every bushel counts this year for South America and for the United States.
All right, we've got the December Chicago wheat down 1/4 penny right now, so we turn this market lower. Same thing for the different thing for the Kansas City wheat market. We're actually up 1 3/4 at 5.53 3/4. However, we did come off of some of the earlier highs. Minneapolis wheat for December's down 2 1/4, but the July is still hanging on to a penny and a half to the higher side. And checking what's on the cotton docket here, we've got December now down 17 points at 71.94. So it too has weakened. And we're going to see if there's still strength over in the livestock market next. We're going to do that and get analysis with Brian right after this here on the Market Day Report. We're going to get thoughts from Brian Hoops in just a moment of what he thinks about this livestock market. Our futures from provided by Bar Chart show us that we're still on the higher side. October live cattle up 55 cents at 104.52 a hundredweight. December fats are up 50 at 103.90. The rest of those contracts are all stronger here, and we're higher in the feeders as well. November up to 235 at 132.92. January feeders up 235. You go all the way out to March, we're up 225 right now. And over in the hogs, kind of mixed action. December up 7 at 67.82. February up 20 cents at 67.85 a hundredweight. But April's down 15, June is down 12, the May is up 5, so not a lot of direction there. Brian, I want to go back over here to this cattle market. The front month, October, 104.52. But I've been looking around. I haven't seen any bids or asking prices for this show list yet. It seems like the country's very, very quiet to this point.
You're exactly right, John. We just don't have any bids or asking prices out there. There was a little bit of trade in Iowa yesterday, I think, on just a few handful of head that won't make a difference in the market. But we may be waiting until Wednesday's Fed cattle online auction before we really see much in the way of any type of cash news or movement at all. But show list numbers are going to be a little bit larger this week. The technical action I thought yesterday was somewhat impressive from the standpoint, felt like a capitulation type selling. We made new lows and then rallied to close higher, slightly higher on the day. And that just felt like maybe we ran out of some selling interest. And so we did see a kind of a follow through type rally this morning, although it really didn't go anywhere. We're going to struggle in here until we see where the cash is going to be, because the futures have already discounted and dropped sharply. Now the cash is going to determine where we're going to go for our next direction.
A 50% retracement, though, in that December live cattle contract would have been down around 101.65 in that area, something we haven't seen in a while. I was surprised we held off of that.
Yeah, I thought maybe that would be kind of a target that we would go down towards and touch in that area, but we didn't quite get there. It's still possible that we will. We could really just chop back and forth here for a while, looking for some longer-term direction, but waiting for what the cash is going to say. The on-feed reports have told us we're going to have big supplies, big placements coming here in the next several months. It's really going to put our demand on notice here. With the cooler temperatures across the Midwest, people are less apt to be outside grilling. And if we can't open the restaurants fully, they can't have outdoor seating. So it really puts, I think, added importance on our exportable demand to ship supplies of beef when we work through these larger supplies.
All right, Brian. Well, I'll do my part. I'll put on my coveralls and go out and grill. Thanks a lot. Hope you have a good afternoon. There's the latest, Christina, from the market desk. Back to you, ma'am.